You know that age-old debate about whether it's better to buy or rent a home? Well, it's a controversial question that always sparks a lot of discussion. On one hand, you might think that buying a home right now isn't the best idea because of rising interest rates, which make buying more expensive. But on the other hand, renting might not be ideal either, especially with soaring rents that feel like you're just throwing money away. So, what's the better option? Let's dive into the factors and take a closer look. I've been investing in property for the past 7 years, so I thought it would be helpful to analyze the buyer versus rent situation in detail. By the end of this video, I hope you have a better understanding of which choice is right for you. This is just one of the property-related topics I'll cover on this channel. Welcome to Flourish and Fortune, your gateway to unlocking a life filled with prosperity and fulfillment. To start, let's take an example. I found a lovely house in Oakville, a suburb of Toronto, priced at 500,000 Canadian dollars. I chose this home because it's a cozy 3-bedroom house and its price is in line with the local average. Additionally, I discovered a similar home in the same area available for rent at $2,200 per month. Now, let's compare the overall cost of renting versus buying this home and consider various financial factors. If you decide to rent, the financial cost is quite straightforward. It's the monthly rent of $2,200. However, remember that this figure only covers the first month and doesn't account for potential rent increases due to inflation. Let's assume you plan to rent the property for 5 years, which is slightly longer than the average rental period in the area. Assuming an average inflation rate of 3% over the next 5 years, the rent is likely to rise. So, although you start at $2,200 per month, over time you could end up paying around $2,550 per month on average. Furthermore, there are additional costs to consider, such as utility bills and council tax. But since they're not included in this scenario, we'll exclude them for simplicity. Now, let's look at the cost of buying. In Canada, the average down payment for a home is typically 20%. So, for a $500,000 home, the down payment could be $100,000. This amount is used to build equity in the property. Additionally, you need to consider closing costs, which usually range from 2 to 5% of the purchase price. Let's estimate it at 4%, which would amount to $20,000. The remaining funds required to buy the home would come from a mortgage or bank loan. Assuming an average interest rate of 4%, for a 5-year fixed-rate mortgage, your monthly payment would be approximately $2,100. This payment covers both the interest and the principal, helping you gradually increase your equity in the property. It's also important to consider repair and maintenance costs, which many people overlook. As a rule of thumb, you should calculate around 1% of the property price per year to cover maintenance and repairs. This can vary depending on factors like age and condition of the home, but it's a good estimate to consider. What's interesting is that in the current market, the total monthly payments for renting this property are actually lower than the monthly payments for buying it. Typically, you would expect the opposite, but rising interest rates have made the cost of owning a home higher than renting in the short term. Now let's consider the opportunity costs, which are often overlooked when deciding between buying and renting. If you choose to buy a house, it's reasonable to expect that its value will appreciate over time. In this case, let's assume an annual growth rate of 5% for the $500,000 home. After 5 years, the value of the property would be approximately $638,145, a difference of nearly $138,145. This suggests the potential for a significant increase in the investment value of the property if you were to buy it. However, when you buy a home, you're investing a significant amount of money that could have been used elsewhere. For example, you could invest that money in something like the S&P 500, which is an average yearly growth rate of 7%. You would need to compare the potential gain on your original investment with how much the house would appreciate during that period. There are many variables and assumptions involved, such as how long you plan to stay in the home, when you'll sell it, and market conditions. It's hard to predict these factors accurately. but there are online calculators you can use to assess the financial implications of buying versus renting based on your specific scenario. By the way, I would love to hear your thoughts and insights in the comment section below. Share your experiences, ask questions, or suggest topics you'd like us to cover in future videos. Your input is invaluable in shaping our content to best serve your needs. Now back to the video. In terms of psychological factors, buying a house gives you the certainty of not being asked to leave by a landlord. You have the freedom to make changes and improvements to your home without seeking permission. This can increase the value of your property, which is not possible when renting. On the other hand, renting relieves you from the responsibility of repair and maintenance costs, which are typically the landlord's responsibility. However, you'll need to pay a security deposit when you move in, and there may be limitations on what you can do to the property. Renting also provides flexibility. If you want to move to a bigger space or explore living in a different area, renting makes it easier. However, keep in mind that relocating comes with higher costs. Ultimately, whether you choose to buy or rent depends on your specific situation and when you think it's the right time. It's important to run the numbers and consider the assumptions based on your scenario. Speaking with a mortgage advisor can also provide valuable insights. The housing market is influenced by various factors, such as interest rates, property prices, and supply and demand dynamics. Currently, there's uncertainty about interest rates and property prices, so it's important to monitor these factors closely. In general, I view property purchases as long-term investments with the potential for financial growth. With past performance is not a guarantee of future results, it's worth noting that historically, house prices have exhibited an upward trajectory with occasional temporary downturns. This historical trend suggests that, over the long term, real estate has been a reliable asset class that has shown resilience and the potential for appreciation. However, it's important to recognize that real estate markets can be influenced by various factors, such as economic conditions, market demand, and supply dynamics. Local market conditions and specific circumstances can significantly impact the performance of the housing market. Therefore, it's crucial to conduct thorough research, consider professional advice, and analyze the specific factors at play in the market you're interested in. When contemplating a property purchase, it's wise to take into account your financial goals, personal circumstances, and the stability of your local housing market. Consider factors such as the potential for property value appreciation, rental home opportunities, tax benefits, and the potential risk associated with owning property. Ultimately, the decision to purchase a property should align with your long-term financial objectives, risk tolerance, and personal preferences. It's essential to evaluate both the historical performance and current market conditions while keeping in mind that real estate is a long-term investment that requires careful consideration and planning. Considering your long-term goals, financial capabilities, and personal preferences, do you feel more inclined towards buying a home or continuing to rent? Comment below and share your thoughts. Be sure to like, share, and subscribe to Flourish and Fortune for regular doses of prosperity tips, success stories, and actionable advice, so you can take charge of your destiny and unlock a life of abundance and fulfillment. Remember, your flourishing future starts here.